Hi, Jonathan York by Financial Partners, looking at investment markets. Into the earnings season now in the US, and certainly a little bit of a mixed bag of results coming through. On the positive side, sort of JP Morgan, Bank of America were better than anticipated in terms of their results, though they did sort of cite that potentially still looking for a recession in 2023, and also look to increase some of the reserves there for potential bad loans going forward for this year. So certainly the guidance there was, a little bit maybe on the sort of weakish side. Then you saw Goldman's coming out this morning, and that was their worst miss in over a decade. But probably have to put that in perspective because, traditionally Goldman's have been, sort of well known for sort of beating their estimates in terms of earnings. So it does look quite an interesting case in the US because, earnings, I say, on the whole are slightly better than anticipated. Also as well, you've still got a, continuing trend of falling inflation. Which just sort of further backs up the argument that, potentially we're seeing peak inflation in the US now, and that's going to be very interesting for the Fed going forward. The latest evidence of this came in the University of Michigan report, which saw inflation falling to around 4%. And that is quite interesting as well, obviously, because the 10-year out there, really backed up quite a bit in terms of yields, currently trading around 352. So that's leading a few economists and analysts now to, sort of speculate on whether the Fed will actually pause at its next meeting or whether we'll just see a 25 basis point hike. So obviously the big unknown is going to be China and, as it's sort of reopening now, how much of a boost that's going to give to global growth, but obviously also as well, in terms of the sort of COVID cases coming out of China. Also as well, a little bit of a recovery in crypto, but it's just going to be interesting to see if it can build on that momentum. Because certainly the FTX debacle is still weighing a pretty hefty shadow over the rest of that sort of sector. Now oil has picked up as well. That's back around sort of $80 now. Now if you look at that, that's come up nearly sort of 10% over the last sort of month or so. Further sort of slightly positive news out of the UK with GDP actually up 0.1% for November. That comes on the back of a monthly rise in October as well. So certainly encouraging news in terms of the UK economy that, rather than sort of contracting and heading into a deep recession, which sort of was forecast from the Bank of England sort of end of last year, the economy is actually sort of growing. I mean, it's not growing tremendously fast, but it is still growing. Same for the EU zone as well. Germany, the biggest economy out there, GDP was 1.9% for the last 12 months, which again, reasonably encouraging considering these sort of rate hikes we've seen, and obviously the nervousness globally over the last 12 months. In Australia, certainly that China reopening is, is having a pretty big boost on the Australian economy, especially on the sort of mining and resource sector. Given that the Reserve Bank was looking at potentially sort of pausing on interest rates, it'd just be very interesting to see when they next meet, to see whether they do actually pause now. Here in New Zealand, still got a further month until the Reserve Bank meets, and it's just going to be very interesting to see if New Zealand can follow the other sort of global sort of trends and see if inflation has actually peaked and starting to sort of head on a downward trend. Later this week, we see the food inflation, and then CPI is next week. But in terms of food, certainly But in terms of food, certain factors are just out of people's control, really. The recent poor weather has really had a major impact on, sort of fruit and veg. And one, their ability to be able to sort of farm it, and then obviously get it to the sort of centres to distribute it to the supermarkets. And obviously with those supply issues come price increases. Also as well, the recent sort of cut in the fuel tax is going to start to be reversed from the beginning of February and will be all but gone by the end of March. So in terms of sort of prices at the pump, that'll put around 25 cents extra on a litre of fuel. Which is going to further impact, obviously, the cost of living issues out there. Now, if you are looking for income options, plenty of alternatives available out there. You can go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.